All right. Now, what do we understand here is the break-even point. Break-even point tells us that at this point, no profit, no loss. No profit, no loss area is here, January to March, wherein you are selling 5,000 units. 5,000 units you are selling now, and that takes only 3 months time, but you have 9 months more. In the 9 months period, you are selling 25,000. Overall, 30,000 units sale from January to December, and you are selling 25,000 from April to December and 5,000 units between January and March. When you know that the break even point is 5,000, the additional sales of 25,000 after March, each and every unit will give you profit, which is equivalent to contribution per unit, that is sales minus variable cost. Every unit will give you profit of $25. Straight profit. Why? Because entire fixed cost of this year, 1 year, is recovered from the sale of 3 months. In other words, we will not have any fixed cost yet to be recovered from April to December. It is already been taken care from the sale of these 3 months. Okay, so that's what I mentioned here. Fixed cost of the entire relevant range means this 1 year period is recovered, and there will be no more fixed cost in this period. Okay, next, after break even point, additional sales will bring profit which is equivalent to contribution. Please try to note down these points. These points are important because once you reach the break even point, the additional profit will be number of units additionally you sold after 5,000 units times the contribution per unit. This may be asked in the examination. Okay, so before break even point, your sales minus variable cost gives you contribution minus fixed cost. Remember, before break even point, full period fixed cost is recovered here. You may take 2 months time, you may take 3 months time, you may take 6 months time, that you need to find out. But this fixed cost is recovered for full relevant range. You may sell entire year 50,000 units, 40,000 units, 30,000 units. But how many units you selling here to reach break even level? Operating profit is zero. Break even point, operating profit is zero. But after break even point, sales minus variable cost will give you contribution, and see, fixed cost is zero. Why? The fixed cost is already recovered here from these units. Say total units are 30,000 units here. So total units are 30,000 units here. Okay, 30,000 units. And 25,000 units you are selling in break-even area. Break-even area. 25,000 units you are selling here, as per my example. 25,000 units. Okay, 25,000 units you are selling here, and 5,000 units are selling. You are selling here to break even. To break even. Here from 5,000 units you are not getting any profit, but 5,001 units onwards you are getting profit. You are entering into the profit area. So there will be a profit when you sell any unit over and above 5,000 units. Clear? Any unit which you sell over and above 5,000 units will fetch profit. Okay. So this is what we are going to find out, that what amount of profit we will get above the break even, what amount of loss we will suffer from when you sell below the break even. Okay, for that you need to know the break even point formula. A break even point can be calculated using units or using dollar amounts. Break even point in units you can find out by dividing this fixed cost divided by unit contribution margin. Unit contribution margin means contribution per unit, which is sales minus variable cost. Take an example. We have fixed cost for entire year is 50,000. The sales price of our product is $50. Variable cost is $40. Therefore, the contribution per unit is, how much? $10. Now, when I sell one unit, I'm getting a contribution margin of $10. I want to recover entire fixed cost of full year, okay, from number of units, some number of units which I'm going to find out. Fixed cost divided by contribution margin. I received here an information saying that yes, if you sell 5,000 units, there will be no profit, no loss, which means 5,000 units is your break-even point, which will cover the fixed cost of entire year and all the costs of the break-even period in which you are going to sell this 5,000 units, whether it is 3 months or 4 months or 5 months, like that. Listen once again. The fixed cost of entire year and the total cost, variable cost of the period in which you are going to sell 5,000 units. This is covered from this 5,000 units. The remaining period out of break-even point, okay, out of break-even point, this is a profit area. This entire amount is fixed cost, which is covered from here itself, this 5,000 units itself. And this is the profit area, that is 25,000 units in my example. 30,000 units we are selling total. Okay, from this 5,000 units, the variable cost of 5,000 units, the fixed cost of entire year is recovered. So there is no more fixed cost for this 25,000 units. Every additional unit you sell, as I discussed here, it will give you profit. Every additional unit you sell, it will give you profit here. Okay, now this is a profit area. Okay, so we are selling how much? So 250,000, variable cost is 200,000, and profit is, or contribution is 50,000, and the fixed cost, no, full period is 50,000. No profit, no loss, this area. Okay, say for example here, how many units we are selling here? 45,000. I'll change it, 45,000 units, total 45,000 units. So 40,000 units are sold in the profit area. So 40,000 units into sales into $50, 40,000 units into variable cost $40, you have a contribution of 40,000, 400,000. So 400,000 full amount is profit. And if you observe here, this extra units of 40,000 units, selling price is 50, variable cost is 40. So contribution. You observe it, profit here. This profit is nothing but 40,000 excess units after the break-even point times the contribution. You got it here. So you don't need to find the profit like this. Every additional unit you sell after the break-even point will give you profit, which is equivalent to contribution margin. Yeah. Break-even point in amount. This we calculated when the information is available per unit. Sales price per unit, variable cost per unit. But sometimes you may not be, getting the amount in, per unit. It says that my expected sales, forecasted sales are 500,000. My variable cost is 400,000, and the fixed cost for entire period is 40,000. This is a different scenario. I want to know what is my break-even sale. In that case, first point is calculate the contribution margin. Contribution margin equals to contribution over sales times 100. Contribution equals to sales minus variable cost. Sales minus variable cost. C minus S. C minus V. Once you calculate contribution, divide it by sales. So contribution margin divided by sales will give you contribution margin ratio. Don't get confused about contribution margin and contribution margin ratio. Just contribution margin means the simply it is the difference between sales and variable cost. Whereas contribution margin ratio gives you the percentage of contribution which is included in sales. So just assume that contribution margin ratio is expressed in percentage and contribution is expressed in amount. That is either per unit or as an amount. So here contribution margin ratio calculated is 20%. Now apply the formula fixed cost over contribution margin ratio. So fixed cost over contribution margin ratio is giving me 200,000 profit. 200,000 profit. So let me verify that whether it is right or not. Okay. To verify, you use marginal costing equation. What is that? Sales 200,000, variable cost 160,000. How did you get 160,000? How did you get 160,000? You remember I gave you the relationship between these three. If contribution margin ratio is 30%, automatically variable cost portion is 70%. If contribution margin ratio is 20%, then what is variable cost portion? The remaining out of 100, 80%. So 200,000 times 80%, 160,000. When I deduct 160,000 variable cost from the sales, I'm getting contribution of 40,000. And my fixed cost is 40,000. Deduct now 40,000. So operating income is 0. Operating income at break-even point is always 0. Yeah. Now let us calculate the break-even point with a projected profit, expected profit, or desired profit. BP with the desired profit. Okay. So you should ask very clearly with after tax profit or before tax profit. Before tax profit or after tax profit. So look for this in the question please. When question is asked break-even point with the desired profit, you always look for before tax profit or after tax profit. Okay, and units or in dollar amounts. You know the formula now, units and dollar amounts. Okay, when um, a break-even point is to be calculated, is to be estimated using the desired profit before tax or after tax, we must find the sales required using, okay, for units, break-even point in units or in units, it will be, it is before tax. I am giving you before tax. After tax I will give you later. Okay, break-even point with the desired profit. Desired profit equals to fixed cost plus desired profit divided by contribution margin. Unit contribution margin means contribution per unit. Okay, this is what we are calculating is before tax. Say for example, company wants a desired profit of 50,000, fixed cost with a fixed cost of say 1.2 million, selling price is say 120, variable cost is say 80. Okay, selling price, variable cost. What is the contribution per unit? Contribution per unit equals to 120 minus, that is sales price minus variable cost, equals to 40, which you need to find out first. Okay, contribution margin per unit is 40. Now let us apply in the formula, that is break even point equals to, yes, what is the fixed cost here? Fixed cost is 1,200,000 plus what is the desired profit? 50,000 divided by contribution margin per unit, we already calculated, divided by 40. Yeah, so fixed cost plus desired profit divided by contribution margin per unit. Now 1,250,000 units or dollars divided by 40,000. 40, so $40. 1,250,000 divided by $40. Okay. Yeah, 1,250,000 divided by 40. How much is that? 1,250,000 divided by 40,000. 30. Not 40,000, it is 40. 31,250 units. If you sell 31,250 units, you will be in, or you will be enjoying the profit. What is the profit? What is the profit? Profit you wanted 50,000, right? Yes. Now let us see. What is the sale here? 31,250 times the selling price 120. Okay. 3 million 37 3,750,000 minus number of units you sold 31,250 times what is the variable cost here? 80, right? 80 will give you a contribution of this much. Okay, let's deduct your fixed cost, that is 1,200,000. Yes, we got an operating income of 50,000. Clear? So before tax income of 50,000. But if there is a tax of 40%, 50,000 times 40, 20,000. Your after tax income will be only 30,000. So read the question clearly, whether he is asking before tax profit or after tax profit. What I observed from the previous candidates' feedback is most of the candidates are asked to calculate after tax profit, not before tax profit. Okay, so you'll have to find out only after tax profit, not the before tax profit in that case. Clear? All right. So now we'll go for the after tax profit, break even point with the desired after tax profit. Got it? Yep. Now let us calculate the break even point with after tax profit. How many units are to be sold? How many units are to be sold to reach break even point? That will give you profit as well. Sales required to to earn an after tax profit. After tax profit. Listen carefully. First of all, if our investment is say 100,000 and I want a return on investment of say 20% after tax. Okay, after tax. This should be after tax. And you have to look for tax percentage. Tax percentage. Tax percentage is say 40%. Okay, what happens if you calculate 100,000 into 20%? 20%, you will earn 20,000. You will earn 20,000, and from that, if you deduct tax at the rate of 40%, you will get here 40% of 20,000, 8,000. The profit will be 12,000. But how much profit I asked you to earn? 20,000. I want to have after tax profit of 20,000. Why did you give me 12,000? Because you earned 20,000 here. I don't want this. I want 12,000 here or 20,000 here. All right. So, see, if you have an after tax profit of sorry, before tax profit of 100, you will be paying a tax of 40, and after tax profit will be 60. Are you getting me? Yeah. So this concept you should understand, that if I earn an amount of for $100, I will have $40 tax, and my after tax profit would be how much? 60. If I want to earn an after tax profit of 200,000, 20,000, what should be the profit I should earn here? What should be the profit I should earn here? This is the calculation. Okay, I want after tax profit of 20,000. How much I should earn here? Okay, that's what. Yeah. Now this equals to 20,000 times, what is that? 100 divided by 60. 100 divided by 60. Now can I write like this? 20,000, 20,000, 20,000 divided by, this is 100 multiplied by 100, 60, no? Instead of this, even you can calculate and let me know the amount here, how much I will get, and I'll give you one more, that is 20,000 divided by, just simply divided by the same 100 minus 60. I'm writing like this: 100 minus 60. This is going to be 1 minus the tax rate 0.4. This will also give you the same amount. Now let us calculate 20,000 divided by 60 times 100. How much is that? You should earn 33,333. Okay. And what about this calculation which I gave you here? 1 minus t. Yeah, calculate please. 20,000 divided by 0.6. 0.6, that is 1 minus 0.4. 0.6. Okay. What is the answer? You are getting the same or not? 33,330, right? So better use this formula. What profit you want? 20,000. What is the tax rate? 0.4. Then you use this one. So this is wrong here. Wrong here. Why? Because I asked you after tax profit, but you gave me before tax profit. When I calculate after tax profit, it is 20,000. Now let us see here. Now let us see what is the profit here before tax profit. Before tax profit is 33,333. Less tax. Less tax at the rate of 40%. 40%. So here this into 40%. Okay, then after tax profit. Before tax profit minus of tax. Hey, we got it. See, this way you should find out. This is right. Correct. Okay. So please take care this one, which is very, very important, whether it's asking after tax or before tax. This is wrong. Why? Because you calculated using before tax profit. It should be like this. Simply you remember this formula, please. Profit divided by 1 minus T. T stands for tax rate. Now I will establish the formula. Here, let us find out the formula and prove it. Now, the formula is break-even point with after tax profit. After tax profit equals to fixed cost plus profit divided by 1 minus T. Remember, this should be calculated separately. I'm writing this in bracket. Always remember, don't have any confusions in the calculation. First you simplify what is P divided by 1 minus T. You will get some value. Then add it to fixed cost. Don't mix up the calculations, please. You simplify this. Then add it to fixed cost divided by contribution margin per unit. Contribution per unit. Yeah, this will give you the profit after tax profit. Now let's say how much profit is to be, how many units are to be sold. So let us take the same example here. This is the okay, but this one we want desired after tax profit. Example, desired after tax profit. After tax profit of 50,000, 1.2 million fixed cost, sales price, variable cost, and a calculated contribution margin, that is 120 minus 80. This much. Okay. Now let us apply in the formula. What is the formula here? Okay. Now fixed cost. What is fixed cost? 1,200,000 plus, yeah, here profit. What is after tax profit? 50,000 divided by 1 minus T. 1 minus T. 1 minus, and oh, I didn't give you tax rate. Okay, fine. Let us say it is 40%. 40%. Okay, and divided by contribution margin per unit. Already you calculated, you kept it ready. That is $40 divided by $40. So I'll give you percentage tax 40%. If it is 35%, you should write here 0.35. If it is 30%, 0.30. Is that okay? Yeah. Now what you need to do is first you simplify this. You simplify this and add it to fixed cost. Okay. Let us continue the calculation with the next step. That is 50,000 divided by 0.6. That will give you 83,333. So I'll remove this and write 83,333. Yes, 83,333 is to be added to now 1.2 million, and find out the number of units to be sold. Plus 1.2 million divided by 40 will give you how many units? 32,083 units. 32,083 units approximately. So when you sell 33,083 units, you will get an after tax profit of 50,000. What is the proof? Let us Let us do some verification. Okay, yeah, verification. What is the sale here? Sales are how many units? 32,083 times what is the selling price? 120 minus 32,083 times 80 is my variable cost, and the contribution is 180, 188, 320, 120, 1,283,320. My fixed cost is 1.2 million. My fixed cost is 1.2 million. And operating income before tax, before tax is this much. Okay. So operating income before tax is given. Now let us find out the, yeah, less tax at the rate of 40%. So it is going to be this into zero point 0.4, 33,328. So after tax income is profit before tax minus tax. You got that $8 difference, you can ignore it, but you got your money back after tax income of 50,000.